We've got some breaking news, and we want to bring in Cristina Alesci of Bloomberg News to get to this. She has learned that BankUnited is planning an IPO. So some very interesting developments in the world of private equity. Cristina, what can you tell us?
Thanks for having me on. We reported that they were planning an IPO about 2 weeks ago. This is more on the size of the offering, which was a mystery to us when we first reported the news. So now we have an actual number, which is north of $500 million, which is pretty big bank IPO.
And the background on this story is Wilbur Ross is connected to this story. John Canis, a guy who used to run, Capital One a while back, they decide they want to go and buy a huge bank in the Florida market, and here we are not too long after, actually, surprisingly, right?
By assets, it's actually the second largest bank in Florida. And you're absolutely right. When the bank failed, a group of investors, including Wilbur Ross, Blackstone, and Carlyle, and a number of other sponsors, basically came in, they got a loss-sharing agreement with the FDIC, so there is taxpayer money that's involved here. And basically they agreed to share some of the losses on some of the troubled assets. And that enabled them to turn around the bank very quickly, actually produce a return on their investment. Carlyle was marking it about 20%, at a 20% premium to what they bought it at, to what the equity that they invested is. And it looks like a very good investment for them, but it is fairly soon that they're making this transition to public ownership.
You've reported a lot on what these players might be interested in doing, buying, and this is an example of a firm that's likely going to continue buying troubled banks, perhaps even easier once you go public. What are you hearing on?
Yeah, I mean, as you pointed out, John Canis, who runs BankUnited, basically built up North Fourth Bank and built it up to a point where it was acquired by Capital One. So he has a track record of basically coming in, rolling up banks into this one structure, and then selling it for more than what investors paid for it. So he's definitely got a track record in this area. This situation is unique because of the loss sharing agreement. The FDIC has a lot, since they're a partner in this deal in a way because of the loss sharing agreement, they have a lot to say about what BankUnited can and cannot do in terms of their acquisitions going forward. They can make it more difficult for them to, so allowing public shareholders into this deal, the thinking there is it may make it easier for them to go out and make acquisitions with the blessing of the regulators. So
Wall Street and Washington actually might both be encouraged by a development like this.
Yeah, I mean, it seems like a good deal for both sides. So
very quickly, you said the size of the IPO could be north of $500 million. It's such a tricky market out there. What are you hearing about when ideally they would actually get this deal to market?
Yeah, well, the people familiar with the situation are telling us that they would want to do it as soon as possible. So, I mean, I think they are locked up until November, technically. So when they got that loss sharing agreement with the FDIC told them can't do it before November. They can't sell out their stakes before November. So ideally, they would like to do it by the end of the year. But as you point out, it's all dependent on market conditions. And so does the size also depends on that as well. So we could see something south of $500 million.
Cristina, great reporting as always. Cristina Alesci breaking that news on BankUnited going public.